Good afternoon, everybody. And my name's Jeff Nigro. As she said, I'm with Nigro & Nigro. I'm a school district auditor, but not just any school district auditor. I'm your school district auditor. Some of you may have even had a visit from one of our staff in the last couple of weeks. So thank you for being here. And as she said earlier, I do encourage, if you have questions, to ask them when we're on that topic. It's just easier when we're thinking about that subject. The only thing I'm going to ask as far as questions go is that if you have a question that's a very specific, unique circumstance that's affecting you at your school site, let's just hold off until the end for that question so we don't take everybody's time. I've learned over the course of doing this presentation for years that there are times when we'll spend 10 or 15 minutes debating an issue that's really only affecting one person in the room and everybody else gets bored. So if it's a general question about the topic we're discussing, by all means ask. But otherwise, I can stay as long as you need afterwards to answer what's going on at your school. So with that said, this is the agenda today. These are the main topics we're going to go over. We're going to take a break somewhere after cash receipts, typically. We'll take a little break in there because I need a break from talking and you need a break from listening to me. So we'll just dive right into the fun stuff now. And we talk about ASBs, we talk about there has to be certain rules and regulations you have to follow, right? There's certain areas that govern how we do accounting for ASBs, and the first one is the Education Code. The Education Code, as you know, governs just about everything that happens in school districts, especially on the education side, but there are some areas that affect ASB accounting. And so throughout the course of this afternoon, we're going to come across certain Ed Code sections. And the thing I just want to make sure I point out is that whenever we talk about an education code, that's the law. That's one of those areas where you don't really have any discretion. It's in the Ed Code, it's the law. So that's out there. The district's governing board policy. As you'll see a little bit later on, the Ed Code gives school districts governing boards the authority to make certain policies that govern ASBs. So there might be certain types of things that your governing board says you can or cannot use ASB funds to do, or you cannot do certain types of fundraisers. So it's important to know the district's board policy when it comes to ASBs as well. And then finally, the last resource there is not really rules and regulations, they're more guidelines. But they're very good guidelines. So if anybody in here is not familiar with the FCMAT ASB Accounting Manual, I'm going to strongly urge you to go back to your site and download that document and read it, because it is a wealth of information. For those of you who aren't familiar with it, FCMAT is an acronym, stands for Fiscal Crisis Management Assistance Team. They have a website, fcmat.org. And on their website, they have under publications an ASB accounting manual. And basically, they're an organization that helps school districts with lots of different areas of business. But their ASB accounting manual, it's like I said, it's a wealth of information with guidelines. And I'm going to be honest with you, we use that manual to train our auditors. And so it's very good information to have. Pretty much any question you could come up with ASBs is going to be answered in there somewhere. So I always recommend that. Now, as I said, the governing board has a lot of authority when it comes to ASBs. The governing board is given the authority in the Education Code 48930. So basically, for example, if you start up a new school in the district, you can't just open a bank account and start running ASB activities without governing board approval. The board has the right to approve any ASB to operate. So that means on the flip side of that, they also have the authority to pull that authority. So in 30-some years of auditing, I've never actually seen the board remove an ASB from a school, but I have seen them take away the ASB's powers and abilities and run everything through the school district, through the business office. In a case where there was an ASB that was basically running bankrupt and there was all kinds of fraud happening, They basically took back the operations at the business office. But, again, the board has the authority, and that's the main point I wanted to make here. Now, there's a lot of information I'm going to talk about today. This is probably one of the most important things that I think you need to remember and take away from today, is the purpose. Why do we even have ASBs in the first place, right? If they're such a pain, if they're such a hassle, why do we even bother with them? Well, this is the general definition of the purpose of ASBs. It's to promote the general welfare, morale, and educational experience of the students. And so that's the main part of the students. It's for the kids. You're not running ASBs for any other district purpose. They're not mandatory funds, right? There's absolutely no benefit that's happening for the district other than the students are getting some experience with some things like, obviously a lot of the activities that go through there, like dances and football games, social events, that's all for the students' benefit. And as an auditor, I've seen lots of ASBs over the years. Some run very well and some run very poorly. And the ones that run very poorly usually have the common characteristic of the fact that the people that oversee that money tend to think of it as their little pot of money to spend. It's like their little discretionary funds. And you got to go back to the source, which is that this is money for the students and you're just in charge of it for them. Now we're going to get into some specifics, but these are some general things that quite honestly don't fit in any other area in the presentation. So I just kind of threw them all into this general section here of general principles. So we're going to look at some of these general guidelines. For example, there's an education code that says fundraising must not conflict with the ideals of the educational program. So what does that mean? Means you can't really have a fundraiser that's going to do something, that's going to promote something or do something that's against what the district's curriculum is. They're trying to teach students. For example, you can't have a fundraiser where the kids are, selling beer or something like that. That would not be giving the message that the governing board wants to promote. It would probably make a lot of money, but yeah. Another general guideline or principle is that large reserves of funds are to be discouraged. Now, sometimes the auditors will bring this up and it gets questioned a lot. First of all, what do we mean? What's the idea behind it? And then secondly, what do we mean by large? So large reserves of funds are to be discouraged means the ASB funds are there to be spent by the students that raise the money. Their intent is not to accumulate a humongous amount of wealth in their bank accounts, because then it's defeating the whole purpose. The kids that raise the money should be the ones that enjoy the benefits of spending it. And so the idea is, yes, they can have some reserves. It's prudent to have some reserves, as we'll see in a little bit, but they're not in a competition to see who can raise the most money and accumulate, millions and millions of dollars in reserves. So with that being said, what do we mean by large? How much is too much, right? Well, you're not going to find anywhere that's going to give you a number, okay, or a formula, except here. As auditors, we often get asked, what's the rule here? What are we supposed to do? We have a rule of thumb. And a rule of thumb, as you know, means it's very loose. It can be very loosely interpreted, okay? But this is a general guideline that we recommend. It's about 3 months worth of expenditures. So, for example, just to make a really super simple example, let's say your ASB spends $120,000 in a year, which I know is not a lot, but just to make the sample, that's about $10,000 a month that ASB is spending. And so a reserve of about $30,000 is reasonable, okay? So does that mean if that ASB has $35,000 in reserves that they're in violation here? I mean, that really is just a decision that management has to make. And again, if you're at 25,000, does that mean you're in financial trouble, that you're at risk of being insolvent? Probably not, okay? So it's just a guideline, okay? But just to kind of give you an idea, that same ASB, if they had, $750,000 in a CD account, then yeah, the auditors would probably question, what's that money sitting there for? What's its purpose? What's going to be done with it? There is an exception to this. If the ASB, if the students get together and decide that they want to save money for a particular purpose, maybe they want to make a large expenditure, and they want to set aside funds for that purpose, and it's approved by the students and documented in their minutes, then that's fine, okay? But the general idea here is just not to be accumulating money just for the sake of building up reserves. This particular point, I like to make this, and this is just because as auditors, a lot of times we'll make recommendations when we go out to do an audit, and sometimes people will ask us, well, where does it say in the education code we have to do that? Where does it say in the ed code that we have to have 2 signatures on checks? Where does it say on education code that we have to have backup for our cash receipts? Okay, well, it doesn't say in the education code. Those are just good, sound business practices. And so that's the principle here, is that you're managing money that doesn't belong to you. So you want to make sure you're using solid, sound business practices. And that's really what all of this afternoon's points are going to really be about, or what are some of those good, sound business practices. Minutes of student council meetings should be kept. You're meeting with the students periodically. I don't know if it's daily, weekly, monthly, quarterly, whatever it might be. Keeping minutes of those meetings is a good way to make sure that decisions that are made are documented, and there's no confusion about what the students approve. And when we were going around the room and you were all introducing yourselves, the reason I wanted to know what your position was, because I like to hear that there's different people from different parts of ASB in here. I heard some advisors, I heard some bookkeepers, some accountants, I heard some principals, or at least one. And that makes me happy, because ultimately the school principal is going to be responsible, and the ASB advisors are going to be responsible for the conduct of the ASB. Even though they're not handling the funds per se, necessarily, something happens in an ASB, they're the ones that are going to usually have to answer the questions. So now it's almost tax season, so I have to talk some about taxes. Now, when it comes to tax rules, I promise you we're not going to get too in depth here. This is probably the area that I have the least amount of expertise in. My wife, who's the other Nigro in Nigro and Nigro, she's the tax accountant in the family, so she's the expert there. But there are a few tax rules that you need to be aware about that do impact ASBs, and so we're just going to go over those very briefly. Nothing too scary, just enough to make sure that you are armed with knowledge, because don't let it be said that I didn't tell you. So one thing that happens sometimes in ASBs is that student body funds are used to pay district employees for extra services, whether it be as a chaperone or some sort of extra duty assignment, refereeing an event, working the concessions at an event, or something of that nature. The ASB should not be paying that person directly, okay? And that's the key part of it, directly. It doesn't say that you can't pay them, it's just the way that it happens. Because if the ASB were to write a check and hand it to that person who's a district employee and say, here, the IRS considers that non-reportable income. And that is a very, very naughty word to the IRS. They don't like non-reportable income. They like to know about every dollar that every one of your employees makes in the district. And so they want everything to be reported. So their rule is, and this is, I say the IRS, but it's the Franchise Tax Board as well, any money that you earn as a district employee has to be reported through your payroll system. That way it can get stuck onto your W-2. So what has to happen is the district will generate a check to that person on behalf of the ASB, and then the district will turn around and bill the ASB to get reimbursed for it. That will make the IRS happy if you do that. Now, in reality, does that happen all the time? I'm sure it doesn't, but that's the rule, just so you know. There are these people that do services for you that are not employees. They're called independent contractors. You've probably heard that term. These are people generally that have their own business or they do their own sort of thing on the side. Typically what we'll see here is for officials for athletic activities, DJs for dances. It might be a professional speaker that comes in during an assembly and gives a talk. These folks are independent contractors. So you pay them directly, but how does the IRS or Franchise Tax Board get to know that they earned that income? Well, there's a rule that says if they make $600 or more from the school district, that it has to be reported to the IRS and Franchise Tax Board on a form, 1099. Now that's the district's responsibility because that's a district-wide rule. So for example, if I had a DJ business and I charged $250 a night, I could go to 3 different high schools and do a performance and I just made $750. The only way that the IRS is going to know about that is if the district reports it. And so every school has to let the district office know. And so the way you're going to do that is this W-9 form, which is simply a form that asks the independent contractor for their tax ID number. Okay? So basically it should be common practice. Anytime you hire an independent contractor, you get that form from them. And a lot of districts make it mandatory. If you want to work for us, if you want to get paid by us for this service, then you need to fill this form out. Okay? Yes, sir, in the back.
So if we're using the same contractor over and over again, do we have to complete the form every time, or is it a one-time thing for that entire year?
Okay, so the question is, if you're using a particular independent contractor repeatedly over time, do you have to get that form from them every time? And the answer is no. Once you've gotten that form from them, you're good. Okay, but you do have to report all your payments that you make to them to the district at the end of the year, because they do have to report that. Okay, and again, I don't want to go down too many rabbit holes here, but there was some legislation that passed a few years ago, Assembly Bill 5, AB 5, which really narrowed the definition for who is an independent contractor and who's not. I would just say this, if you're ever in doubt about whether somebody's an independent contractor and whether they need that form, just ask the business office. They'll let you know, or they'll ask me. All right, that's all for taxes, I promise. Well, not quite. Almost. Anyway, clubs. I think everybody in here was middle school, high school, right? So you're all familiar with clubs. Sometimes you've got some really small ASBs that don't get into clubs, but I think most everybody here is going to have them. So as you know, they're a very significant part of the ASB. And just in case you've never heard of a club, it's really a subset of students within the ASB. So basically, the associated student body is every student in that school. Just by being enrolled in that school, they're a member of that student body, that ASB. A club is a group, a subset within that group. I feel like a math teacher right now explaining that you've got a big circle, that's ASB, the little circle within that, that's your students. So basically it's a group that just decided that they wanted to form for a very specific type of purpose, common interest, some sort of special activity. So there are some rules about clubs, and one of them is they have to be composed entirely of district students. Okay, so you can have a club that has students from other schools as long as they're in the same district. And so I give the example of, you may have, I'm going to make up a school, but so you have high school A and high school B, and high school A has a surfing club. High school B doesn't have a surfing club, but if there are kids at high school B that want to be in a surfing club, they can be in that one. Okay? So that is allowed because it's the same district. But if it's a neighboring district, out of luck. Any club has to have what's called a charter or a constitution. That sounds really formal. It doesn't have to be. It can just simply be a document that says what that club's purpose is going to be. It usually lists, okay, here's the officers, here's the name of the club, here's our main purpose. We're going to raise money to do this activity. We're going to be a Pokemon club. We're going to go out on little Pokemon chasing events or whatever. It doesn't have to be anything particularly noble, but ultimately it has to be a document that says this is what we are and this is our purpose, and that gets approved by the student body, and they become part of the ASB. And then a certificated district employee has to be appointed as the advisor. And the reason for that is because let's not forget that we're talking about high school students, which for the most part, these are still minors. So there still has to be an adult there to make sure they're not doing anything that's going to be problematic, we'll say. Okay? Now, no ASB presentation would be complete without talking about what we call school-connected organizations, related boosters. Typically, booster clubs are what we think of when we talk about these kind of organizations, but they can be in smaller schools, your PTA, PTO, whatever. I just say school-connected organizations because it kind of covers the whole gamut. So these are typically groups that are formed by parents, and they are to provide support for a very particular activity or event at the school. The largest ones that we typically see are in high schools, are going to be related to the football team or to the band. And it's basically, like I said, a group of parents who volunteer and they decide that they want to do fundraising and help to provide extra money and support for those particular programs, okay? And so they can do a lot of benefit in an ASB. But there are, like anything, sometimes well-intentions don't necessarily work out well. And so we have to make sure we're aware of what some good guidelines are. So this is a very important topic, is that those organizations have to be separate from the school district. They are legally separate. And again, and because I said I was only going to talk about tax a little bit more, because the ASB is considered part of the school district, any fundraising, any money that the ASB generates is automatically exempt from income tax. Because guess what? The IRS and Franchise Tax Board like it when organizations make profit because they want to have their share of it, right? Well, because you're part of the district, you're automatically exempt from that. You don't have to worry about it. However, these parent organizations don't have that exemption. They're not covered under the district's umbrella. They're not legally part of the school district. They are separate, not-for-profit organizations. And so if you form a nonprofit organization, one of the first things you have to do is to get tax-exempt status from the IRS and Franchise Tax Board, or guess what? Any money that you raise, they're going to have their hands out and say, where's our share? So you have to tell them that you're only doing it for a charitable purpose. So it's very important that they get their 501c3 status approved before they start doing any activities. And then on a physical basis, their funds should always be kept separate from ASB. Okay? ASB has its funds. The booster clubs should always have separate everything, separate bank account, separate financial statements. When they raise money, they should just be putting it in their own bank account and cutting a check or buying goods and supplies or whatever it is and providing them to you as the ASB. They should not be handing you big buckets of money and saying, here, we did a fundraiser. Okay? If they do, kick it back to them and say, here, put it in your bank account and give us a check. There is an ed code to talk about here with boosters, and this one, I want to make sure that it's clear. This only applies to booster clubs, okay? This is not in ASB, but it basically prohibits booster clubs from using students to be involved in their fundraising activities during school hours. So you have a window. You have an hour before school starts, the whole school day, and then an hour at the end of school. During that time, Booster Club is hands off when it comes to kids. They can't do any fundraising during the school day on behalf of the boosters. Obviously, the kids can do their own fundraising for ASB and all that, but as far as Booster Club goes, nope. They can only do them an hour after school or weekends or time, whenever school's not in session. And usually the school district governing board is going to have some policies and guidelines and regulations that affect these organizations as well. A lot of school districts will maintain the authority to even, say, audit the books of the Booster Club if they want. And so we've actually been called in to audit booster clubs on behalf of school districts. It's always fun because the booster clubs are never excited about that, but there's usually a good reason behind it. And I will tell you that if you go home tonight or go to work tomorrow and Google on your computer booster club fraud or booster club embezzlement or PTA embezzlement, you'll just see so many stories, one after the other, of how people with good intentions somehow just got into these situations. And, there's a lot of potential problems in this area, so it's important to have rules. So, like I said, one of the most important things is the first one, they're not under the direct control of the district. There's only so much that the district can do when it comes to them, okay? But in the minds of the public, a lot of times they see them as part of the district. And so there's sort of a unintentional connection there. I have another client who recently had a fraud at one of their booster clubs, and they just had parents speaking out over and over again about how corrupt the district was and how could they let this happen and blah, 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 blah. And they constantly explaining they're not under our control. We don't control what they do. Blah, blah. But it's the public perception. And so that's something you've got to be aware of. Okay, we're going to talk very briefly about ASB budgeting. And, sometimes we don't think about budgeting when it comes to ASBs, but the reason we want to do it is because in a lot of ASBs, they raise a significant amount of money. In fact, many ASBs raise more money than a lot of other district funds. And so just like the district has to have budgets for all of their other funds, it's really highly recommended. Notice I didn't say required, but recommended, strongly urged, that ASBs have budgets as well. Now, I know a lot of times budget can be a scary word, especially when we're talking about, student funds. And I don't mean this in any way as a put down, but it's generally being handled by people who aren't accountants, who aren't normally business people. Normally. Sometimes there are people in there with business backgrounds or accounting backgrounds, that's fine, but most of the time they're not. But we can still do budgeting, and it doesn't have to be a scary word. A budget is simply a written financial plan, and it's a guide, and all those things. One of the main things, though, is it's never in cement, okay? I can ask anybody from the district office how many times throughout the year are they revising the budget, because constantly new information is coming in all the time. We thought we were going to get this much revenue. Oh, wait, we're only going to get this much. Oh, wait, now we're getting this much. Oh, but we have to spend it by this day. So the budget is constantly in flux. Now, I'm not recommending or suggesting that the ASB needs to be changing their budget every week, okay? But just going through the process of developing one, I think, is a very good idea, and monitoring it throughout the year. So let's take away a little bit of the mystery from it. Revenues. That's the first part of your budget. You're going to estimate revenues. So it's really just a process of what types of activities are we going to have that are going to raise money. We're going to do fundraisers. We do have a student store. Do we do yearbooks? All those other things. Maybe we did a big fundraiser last year and it was a big flop. And we thought we were going to make all this money and it wasn't successful. So we're not going to do that one again. So we have to take that into account. But maybe we're going to try a new one instead. And we got to estimate. So it's all about estimating. Okay, they're just guesses. That's all it is, really. And a budget is just putting those guesses on paper or electronically or whatever. Put them in Excel. Doesn't have to be anything formal. It doesn't have to go to the board for approval. It's simply a process that you go through of estimating your revenue. And then expenditures, we're always going to recommend for ASBs, start by looking at last year. What did we do last year? And how is it going to significantly change from last year? Are there going to be some new things that we're going to incur? Do we know like the price of yearbooks doubled or something, so we have to budget for that? We did a grad night last year, but it was way too expensive, so we're going to do it at a different venue this year. So all those things kind of go into account. The idea of doing this is you want to make sure that you're going to have money to run the ASB for the year, right? You're going to look at your ending balance from last year, whatever you had left over, because you did have a reserve, right? We want to make sure you didn't end the year with a zero balance or end even worse in a negative position, right? So you're going to have some money left over, but in an ideal world, right, you're going to have as much revenue as you do expenditures. And that's what we call a balanced budget, when you have zero revenues over expenditures at the end of the year. We know in the real world that never happens, but that's ultimately kind of what you're going towards, right? And so you want to make sure you're not going to end up in a situation where you spend way more money than you brought in, unless you're doing that intentionally, because maybe you're sitting here going, oh, wow, we do have that $750,000 in reserves and we need to start spending that down. Well, that just means the students for the next several years get the benefit of spending other people's money that they didn't raise. So if it's intentional, that's one thing. But the whole idea here is that you actually go through the process of thinking about this stuff and making a financial plan for the year and seeing where we're going to land. Okay? Have the student council look at the budget and then monitor it throughout the year. Okay? So like I said, maybe you anticipated this big candy fundraiser was going to raise tens of thousands of dollars in the ASB, and it didn't. And so because it didn't, your revenues are going to come up short. So do we have to adjust our expenditures somewhere down the line? So those are the kinds of things that you can do if you're really watching your budget. All right, now we're going to start getting into some of the meat here. And we're going to talk about cash receipts. And I can tell you as an auditor, this is probably the most problematic area that we see when it comes to ASBs. We've written more audit findings, not just in your district, but throughout California, we've probably written more findings in this area than anywhere else, okay? Because we're dealing with a lot of money that comes into ASBs, and a lot of times people don't do a good job of keeping track of where it's all coming from. They just take it, put it in the bank, and then the auditors come along and say, okay, where'd that money come from? They say, well, it came from this. And okay, well, how many did you sell? How many, and then there's no documentation to support it. And so the question has to be, as auditors, for us, well, how do you know that's all the money that got collected? We know how much made it to the bank, but we can't tell how much actually came in. There's plenty of seats up front. Don't be afraid. So, we're going to focus on three main topics when it comes to cash receipts. Timely deposit and receipt of cash. Okay, so we're going to talk about that. And then we're going to spend a little bit more time talking about point of collection documentation. Okay, or point of sale. Sometimes you'll hear it called. And then we're going to talk about the importance of these other things, sales analyses, revenue potentials, okay? We're starting to get into some scary stuff here, but it can be looked at as, that's a lot of red tape, okay? But you got to understand, as auditors, that red tape is one of the few things that's a lot of times is protecting you from being a victim of fraud. And so we look at those as necessary steps in an important internal control system. So some general guidelines when we talk about cash receipts, deposits. Pre-numbered cash receipts should be used for all sales of goods. So I want to get you all into the mindset of thinking that anytime you're selling something from the ASB, there should be some sort of a document that goes along with it that proves that sale, okay? In a sales environment, like a retail environment, there's typically a cash receipt. So when you buy something, the cashier rings it up in the cash register and it notes it in the system. And so they have a record of this was sold, this is how much cash we brought in, okay? So obviously there's a lot of things that happen in ASBs, and we'll start looking at some more specific situations. So the type of cash receipt documentation is going to vary from item to item. But the idea here is that anytime you sell something, there should be something that verifies or documents that sale. Cash receipts must be recorded and deposited intact and promptly. So what does that mean? It means intact. That means you don't. So for example, let's say, and I know a lot of times now in ASBs we're not handling cash as much as we used to pre-COVID, and it seems like now a lot of payments are coming in electronically, or we're taking a lot of things using certain apps and things like that. But just think about the general principle here is if you're collecting money from a particular fundraising event or activity, I'll give an example of something that went really wrong at a client of mine several years ago when they had a dance and they were collecting receipts at the door. They had pre-sales, but at the door they were also collecting cash. And during the event, one of the teachers, advisors, whoever, took a bunch of money out of the receipts, out of the till that they had been collecting money for to run to the store to buy more drinks. And so that basically spoiled the audit trail. It basically eliminated the ability to be able to tie back that a lot of ASBs miss, that results in a lot of audit findings, is this point right here. Auditors need to be able to see that point of collection documentation. So, and I don't want to make it sound like it's all about the auditors, okay? You're not doing this for the auditors, you're doing it for your own sake. Because remember, this money that you're taking care of isn't your money. This is a student's money. So you want to make sure it can all be accounted for. So, typical example, we look at the bank statement and we see there was a deposit for $1,000 made on March 3rd, right? So the auditors will say, okay, let me see the backup documentation for that. And then what we get is a currency and coin count sheet. And here's a piece of paper that shows that you got so many $20 bills and so many 10s and so many 5s, and it adds up to $1,000. And then the person looks at us with a big smile. Look, I have documentation. And the auditor goes, that doesn't tell me anything. That just tells me that you put a bunch of numbers on a piece of paper. That doesn't show me where the money came from. And the most important thing the auditors want to know is all the money accounted for? How do we know that that $1,000 is all that you got? How do we know that you didn't generate $1,500 and keep $500 for yourself? Or whoever originally did the fundraiser. So that's what we're looking for, is some sort of a document that provides proof of whatever was sold or whatever service was provided, okay? And so the thought then becomes, well, what does that look like? And the answer, like so many good answers in accounting, it depends, okay? So we're gonna look at some common examples of some types of revenue generating activities and what some types of documentation you might keep would look like in a minute. Still have a few more of these guidelines to go through. So money should always be kept in a safe until the deposit's made. So hopefully at all your school sites you have a safe or a vault or some sort of a thing to put money in until you take it to the bank, right? At the very least, hopefully a locked file cabinet. One of my favorite stories, actually I won't say the name of the district, but I'll just say it's a school district in nearby. And we were at one of their high schools one year, and I asked if they have a safe, and they said, absolutely, we have a safe. And I said, well, I'd like to see it. So they took me over to the safe, and it was one of those big wall safes that has, like a giant door and a combination you put in. Or, I'm sorry, not a combination. It had a lock, like with a key and everything. And they opened it, and they showed it to me. And there's racks, and they have all their money in there, and it looked all good until I realized outside the door there was a little hook with a key on it that had anybody could go up and access it. So I said, that's not a good idea. So yeah, it's great to have a safe or a vault, but then you also have to think about how many people have access to it and that sort of thing. Yeah, I generally recommend no more than 2 or 3 people. You don't want just one person because, obviously if something happens to that one person, you're out of luck, right? So it should be at least 2, but when you start getting more than 3 people that know this safe combination, or they have the key to the door or whatever, it can get kind of dicey too. Because there was another situation that happened in another district where some money had been taken out of a safe over a weekend. And they were asking around, and the question came up, well, how many people know the combination to the safe? Well, principal, vice principal, this teacher, the advisor, blah, blah. They listed 10 people that knew it. So that made it quite difficult to find out what had happened. So like I said, 2 or 3. There's a question in the back.
At a high school, when there are multiple evening events and there's a principal and 4 assistant principals, and we have to take that cash box from the snack bar or whatever and lock it away that night, is it acceptable for those folks that I said to have the combination to the safe to be able to store it safely? Is that too many people?
How many?
Well, you have the principal and
Right.
4 assistant principals, and there could be anywhere from 3 to 13 evening events in any given week.
Yeah, if you have 4 assistant principals, first of all, kudos to you. But that's not unreasonable. I mean, I think the idea is that you want to make sure that only people that absolutely need to have it. Now, I know a lot of schools, and I'm not suggesting that you do this, but I know in a lot of schools where the principal doesn't even want to be one of the people that has the combination. They don't even want to know. But there's also been ASBs where the principal was the one that confessed to embezzling money out of the safe too. So.
But if I don't have the combo to put that money away that
Right.
night, then where do I put it?
Exactly. So if you're going to be one of the ones that's in a position to have to make the deposit, it's a good idea. So that's something you have to decide. It's something that maybe, I don't know if there's a district policy about it, but usually not. But that's not an unreasonable request, I think, to have a few people. Bank deposits should be made at least once a week. Now, there's a lot of shoulds being thrown out here because a lot of these aren't really rules per se. They're just guidelines. They're recommendations. There's a lot of leeway here. We say once a week is a good amount of times to make bank deposits, but that can depend. If you're doing a lot of fundraising, let's say it's a particularly busy time of year and you're just bringing in bucket loads of money, you might want to make the deposits more frequently than once a week. You don't necessarily have to wait to the end of the week. But you might also have a very slow time, and maybe over the course of 3 weeks, you have $100 in the safe. And you only want to make a deposit one time, and that's fine too. So there's a little bit of judgment involved in there. But as auditors, what we don't want to see is where you're, depositing money once a month, and every deposit's huge, because that just means that money is just sitting there in the safe. And I don't want to get into a debate about the safety of banks and all that, because people can argue about that. But certainly the idea is that it's probably more safe in the bank than it is on your school premises. Thefts do happen. Students have been known to break into the school and get into the safe and things like that. So the idea here is to safeguard the students' funds and deposit the money, get it off your premises. And whether you do that through well, I think the next slide is going to talk about that. Or maybe not. So whether you make the deposits on campus yourself, or whether you use an outside service, or somebody from the district office comes and picks the funds up, whatever method you use, it should be, it needs to be secured, obviously. One of the things we usually recommend is that you make sure that you're not taking a large amounts of cash. Again, a lot of ASBs aren't dealing with as much cash anymore, but if you get into a situation where you do have a lot of cash, it's probably a good idea to have more than one person taking the deposit to the bank. And that's just for pure safety reasons. I've known ASB accountants to be robbed on the way to the bank because somebody knew that they had a lot of money. So it's a good idea. And then finally, this concept of an audit trail, that's the one point I really want to just keep hammering again and again and again, is this audit trail. Because, again, in the ASB world, that audit trail is the one thing that's going to help not just the auditors, but anybody else that's going to question any amount of money that came in. That audit trail is going to be basically your ticket to freedom. That's going to be your get out of jail free card. Okay, you're going to have an audit trail that's going to prove this is how much money was collected. Now, like I said, there's the point where the money is initially collected, the point of collection. That happens at the school site or off campus or wherever. If you're selling something, or if they're providing a service, if they're doing a car wash, whatever it might be, that point of collection is an initial point. And then when that money gets turned into the ASB office, there's another point of the audit trail that's critical. Okay? So if you're the accountant at the school, you're probably doing a pretty good job of getting that money from that person and then writing a receipt for it. But you want to make sure that the money that got to you is the correct amount too. And so they should be providing some other sort of support for that money that they turned into you. And if they don't, that's a key element of the audit trail. It's an incomplete audit trail. Okay? And we don't want to get into a blame game about, trust me, I've dealt with lots of people at the school where the bookkeeper, and I'm not impugning anybody here, but I've seen many a bookkeeper that says, well, it's not my responsibility what happens. Once the money gets to me, it's my responsibility, and that's all I worry about. And that's fine, but that's kind of being, not being a team player, and that means that the auditors have an incomplete audit trail, and that means that, well, something's wrong. There's a problem somewhere. And so we just got called into a district to do an investigation about that very issue, which is why it's so fresh in my mind. So they have a lot of people turning in a lot of money, and the bookkeeper just didn't have complete records. And so we suggested that they start making sure that everybody plays along and everybody's on the same page. So some more about cash receipts. We talk about cash receipts. I know a lot of you probably picture those little cash receipts that come in a book, little spiral bound books with the little pre-numbered cash receipts. We use those a lot of times for certain types of sales because they're very easy to just write out, like who turned in the money, for how much. So you want to make sure if you're using those and you have those that they're kept and controlled in the ASB office so that you know you can account for all the numbers of the ASBs. Now, a lot of times you might give those out to teachers if they're doing a particular event to use, and that's fine as long as you know where they are. The main thing is if you are using those, all the numbers have to be accounted for. That's the whole reason there's a number imprinted in the upper right corner, is to account for those numbers. If you have cash receipts and they're out of sequence and you're missing cash receipts, you're supposed to ask what happened to those numbers, what happened to those cash receipts, because that could mean, and I'm not saying it automatically means this, but it could possibly mean that somebody collected money, wrote a receipt to the individual, but didn't deposit the funds. They still have that money, or they put it in their own bank account. Okay, so if you're not looking at those numbers to make sure they're all accounted for, somebody could do that and get away with it. And again, it could also just mean they forgot, or it could mean that they voided it, or whatever. It could mean a number of things, but you have to at least look for those. And then those types of cash receipts typically are in triplicate. There's usually 3 different copies of it. You want to make sure one goes to the person that turned in the money, obviously, but one is going to go with the deposit so that becomes part of the audit trail. So when the auditors are looking for those receipts, they're going to see, okay, for that $1,000 deposit, I see 5 cash receipts for $200 a piece that add up to that. Now I have an audit trail, okay? And then 1 copy remains in the book. And then there's this issue that comes up sometimes where we have an event or an activity and it says cash over or short. That comes up a lot. And I always tell clients, make sure that you at least have an idea in mind about how much that number has to be before you decide you want to investigate it. Now, I've had clients tell me that, hey, if we're off by even 1 penny, we're going to look into it. Go for it. We're not going to stop you. But then, you want to also make sure that you're not just saying, it's only off $100. Who cares, right? So you want to make sure you have some sort of a threshold that says, well, maybe if it's $1 or $5 or $10, it's going to vary. Somebody gave out the wrong change or whatever it might be, depending on the event or activity, obviously. But the idea here is to at least monitor it, okay? Especially if it's an ongoing type of event or activity. Student store, this happens a lot of times. The student store runs every day pretty much, and let's say at the end of the week, you notice every day the cash keeps coming up short, $20, $20, $20. That might be something you'd want to look into, because that's something that we in the profession refer to as a pattern. Okay, I talked about revenue potentials a little earlier when we talked about fundraising activities. What is a revenue potential? It is something that's going to tell you your potential revenue. Really fancy name there. So, a revenue potential is a good internal control that works extremely well in certain situations. And I say it works well in situations where you're selling things at a fixed price. So typical examples would be yearbook sales, ASB cards, or you might be doing a fundraiser where you're selling t-shirts or something along those lines, right? So what exactly is it? Well, let's get into that. So a revenue potential, let me give an example. Let's just make a simple example to illustrate the point. Let's say we're going to do a t-shirt fundraiser. We're going to sell t-shirts that have the school logo on them, and we're going to sell them for $10 a piece, okay? So we go out, we go to a vendor, and we say we need 1,000 t-shirts. That's a lot, right? Let's say 500. We need 500 t-shirts with the school logo. You order them. Now we've got 500 t-shirts, but we're going to sell them for $10 a piece, right? So without using a calculator, 500 at $10 a piece, that potential revenue is how much? $5,000, right? That means if we sell all 500 of those t-shirts for $10 each, we're going to have $5,000 in revenue at the end of the fundraiser. That's it. I just did a revenue potential, okay? But guess what? It doesn't end there. That's the first step. So the next step is, okay, at the end of the fundraiser, we've sold all the t-shirts. Now we're going to look at our revenue. And we see that our fundraiser generated $4,200. Okay. So we generated $4,200. Our potential revenue was $5,000. Why are we $800 short? Okay, well, the first thing we got to do is think, well, let's see. Did all the t-shirts sell? So let's check inventory. So we go back and we say, oh, guess what? There's another 20 t-shirts here that didn't sell. Okay, well, that accounts for 200. So, all right, so now we're 600 short. So what else happened? Oh, well, remember those other ones we gave away for free? We gave them out as gifts. Oh, okay, so there's another 20. So now we're 400 short. Well, we rack our brains. We've got all the inventory accounted for. Is there anybody that was collecting that forgot to turn any money in? Nobody. Okay. Well, we're $400 short. So now we better start looking into it. Okay. But guess what? If we hadn't done the revenue potential, you know what we would have done? We would have taken that $4,200 and we would have gone on our way, and somebody could have stolen $400 from the fundraiser and you'd be none the wiser because you didn't look at it. Okay? That's why a revenue potential is so important. Now, like I said, that doesn't work in every situation. It doesn't work for every type of fundraiser. Okay? There are certain types of things that like I said, it really works well when you have fixed items that you're selling, or you're selling items for a fixed price. If you're selling things at different various prices, you can still do it. You just have to do a little bit extra work to determine what that potential revenue is. But the idea here is that you first developed an expectation. This is how much money we're expecting to receive from this event or activity, and you compared it to how much you actually got, and you investigated the difference. And guess what? By doing that, you're actually doing a little mini audit. Congratulations, you're an auditor. So, but without doing that, somebody could have the ability to take money, embezzle, steal, whatever you want to call it, and get away with it because nobody's accounting for it. So that's why a revenue potential is such an important tool. Now, student stores. I'm going to go ahead and assume that at least some of you in here have a student store. Okay. Before we get into the specifics, I always like to bring this up here because this question comes up sometimes is about selling PE clothes through the student store. And that's perfectly allowed. You can sell PE clothes through the student store. Because sometimes people were under the impression that, well, we're not allowed to sell them, and that's not true. You can't make it mandatory for students to buy PE clothes. You can make it mandatory for students to wear PE clothes, but they can't be forced to buy them. Because guess what? That would be a violation of the Constitution that entitles a student to a free public education. They can't be required to purchase anything necessary to participate in the school program. So you can say they have to have PE clothes. You can buy them through the student store, or if you cannot or don't want to buy them, then here you have a set here that can be provided for you. And those free ones can't be like used, smelly, moth-eaten with holes in them. They have to be of similar quality. They can be used, obviously, but you can't say, here, you can buy these new ones or you can get these ones that haven't been washed since 2014, because that's not really giving the student a choice. So the idea here is that you can sell them, but you can't make kids buy them. Okay, so student stores now. Student stores can take on all different sorts of appearances. I've seen a student store that looked like a Office Depot. Racks and shelves and aisles, and it was impressive. And I've also seen student stores that is nothing more than just a window that sells a few little trinkets like pencils and things like that, okay? So we're going to go under the assumption of something that's kind of in the middle, which is what most are, okay? But one of the key concepts here is that the student store must be at least supervised by a district employee. Now, again, they can be operated a number of different ways. Some districts say kids aren't even allowed in the student store, let alone to work in there, okay? But then there's others where they let the kids run the whole show. And that's fine as long as there is a district employee who's supervising. Okay? Should, here's another one of those should words. Should use a cash register. That's going to really vary depending on how much business that you're doing a day, how much stuff you're selling through the student store. If you're selling a lot of inventory, a lot of merchandise, then a cash register is a really good idea. There's a reason that they're used in retail environments because it's real easy to ring up a sale. At the end of the day, you have a register tape that you can reconcile to the cash. Works really well. But if you're only selling a handful of items every day, if let's say you're only selling like 5 or 6 items through your student store each day, then a cash register might be overkill. So in that case, you might just want to do something less formal. And I hate ever recommending this to clients, but at an absolute nothing else, bare minimum, this is one step above doing nothing, is a tally sheet, where you just have a piece of paper that says, here's the items we're selling, and you just put little tick marks on how many you sold. Now, I strongly discourage you from doing that if you're selling a lot of stuff. You know, if you're selling hundreds of items every day, then that's minimal effort. That's going to be, the reason is that can be so easily mistaken or manipulated. It's really not good documentation, but like I said, it is one step better than doing absolutely nothing. But the idea here is, again, you're creating a point of sale document. So at the end of the day, or the end of the week, depending on how much you're doing, you have a record that says, this is what we sold, this is how much money we should have in the register, and now you can compare it. Cash should be turned in daily to the ASB office. That's a good practice to follow. And then monthly physical inventory should be performed. I always forget, I want to take the word monthly off that slide because that's going to really depend on your situation, how much activity you're doing. A typical ASB, we usually recommend monthly because they might be selling enough stuff over the course of a month where doing a physical inventory is good. Because guess what? Student stores kind of have a double risk, where a lot of operations have the risk of funds being stolen, but the inventory or the student store has the risk of not only theft of funds, but the theft of inventory. Okay? I mean, I've seen ASBs where, you know, they were stealing chips or whatever, you know. I mean, you know, they're giving out. A lot of my stories are old, you'll know, because I used to work back in the days when you could sell chips to students. They weren't like this forbidden thing, you know. They could sell sodas, and they used to do a lot of business. Now they can sell probably rice chips. I don't know. I'm I'm a little far removed from that, as you can tell. But the idea here is that you want to make sure that you have some accounting for the inventory, and it reconciles to the cash. And then there's that nasty word that I said I wouldn't talk about again, but sales tax. I am not a sales tax expert by any means. This is the absolute minimum or maximum of what I know right here. So I would say on this one slide, on that one point, if that's something you want to know more about, I would suggest you go to the FCMAT ASB Accounting Manual. There's a little section in there about it. But just be aware that there are instances potentially where you could be subject to paying sales tax. And it usually has to do with selling items such as things like notebooks, t-shirts, mugs. Basically, the way it was explained to me one time is if it's something you could go and buy at Staples, it's probably something you have to pay sales tax on. Because even though as a government entity, you're exempt from income tax, you're not exempt from sales tax. Now, the exception to this would be the reason it's under student stores, because there's an exception that exempts you from sales tax if you're dealing with, you know, non-recurring sales. So for example, that t-shirt fundraiser I talked about, we're just doing a one-time fundraiser to sell t-shirts. You don't have to pay sales tax on those types of items. Okay? The sales tax really only applies when you're doing recurring, and that's usually why a student store has it, because the student store is open kind of daily. So. Ticket controls is something I mentioned earlier that we would talk about a little more detail. And we're not talking about speeding tickets. That's a whole nother lecture. But we're talking about internal controls. We're talking about that red tape. Or as an auditor, what I like to say, the things that are going to help keep you out of trouble. Anytime you're doing things like athletic events or dances or drama productions, basically anything where you're charging admission to attend an event, your ticket control is going to be your best friend. That's going to be the absolute best type of documentation you can have for an audit trail. And so a pre-numbered ticket log is going to be used to reconcile tickets. Now, there is something, now this used to be a huge issue when it came to things like football games, gate receipts. But now I understand a lot of schools are using, and I already forgot the name of it, but there's a GoFan, yes. I didn't want to say the wrong thing there. So there is something that where it's sort of a third party that gets involved and handles all of this for you, and that's fine. Okay, those, power to them, let them have it, right? It gets it off of your hands. But there might be other situations that come up where you are, like maybe there's a school play or something of that nature where you're charging admission. And so this is where you want to use these ticket logs. So you keep, again, it's a pre-numbered ticket. And so you'll be able to know by your beginning ticket number, your ending ticket number, how many tickets you sold, at what price. And if you're very clever, you can do the math and figure out, based on that, it's like a revenue potential, right? We know how much we sold, at what price, this is how much money we should have from this event. And then at the end of it, you reconcile it to make sure all the cash is accounted for. Okay? And again, it's one of those things where if you don't do this, fine, you'll have an audit finding, but right, no big deal, right? Audit findings, no big deal. But the problem is then that just means that somebody now has the ability to steal from you, or steal from the students, we should say, and you'd have no way of knowing. And that's not something the auditors are going to be okay with, and it's probably not something the district office is going to be okay with. And I guarantee it's not going to be something the governing board is okay with. So generally, those kinds of audit findings are something that has to be taken seriously. Okay. All right, and then Raffles. And this is the last slide we're going to go over before we take a break. So Raffles are very popular in ASBs, at least they used to be. I have to say I have seen them decline in popularity recently. But they are out there enough, they're important to talk about. The most important point to make about Raffles is they're illegal. Okay? So that, right there, that's the end of the slide, right? The California Penal Code, for some strange reason, the California legislature doesn't like the idea of minors gambling. Okay? And so they prohibit games of chance. So what is a game of chance? A game of chance is defined in the law. I'm not an attorney, I'm paraphrasing, but basically they've defined a game of chance as any sort of a game where somebody has to pay money to enter it, and the only thing they receive in return is a chance to win a prize. So a raffle or a bingo, anything along those lines is considered a game of chance. And the California Penal Code says that's gambling, and we don't want minors doing that. Now, that's only to student organizations. Booster clubs can do these types of activities because they're not student organizations. They're parent organizations. They're adults. Adults are allowed to gamble under certain circumstances. The Penal Code also has very strict regulations on the types of events and activities that booster clubs can do, but this is not a booster club workshop, so we're not going to worry about that. We're just talking about the students. So if you're sitting here thinking, oh my God, we're having a raffle at the school tomorrow, I'm in trouble. Don't worry, I've got a loophole for you. So there's a couple ways you can do a completely legal, and this isn't one of those sneaky wink wink, don't tell anybody kind of things. This is all above board, perfectly allowed way to do a raffle in an ASB and to get away with it, to have it perfectly legal. So the first thing is that you accept donations as part of the raffle. So you may have seen situations where you've seen a raffle and the ticket actually says on it, donation, right? The reason that works and the reason it's legal is because what happens in that situation is you're telling the students or anybody that's participating in the raffle that you don't have to pay for this raffle ticket, okay? You want a raffle ticket? You want to join a raffle? Here you go. But guess what? If you give us a $5 donation, we're going to say thank you by giving you a ticket to our raffle. And so that's a perfectly legal way of doing a raffle, is you make it where it's a donation. The catch on that is that if somebody asks you for a ticket for free, you have to give them one, okay? So, because if you say, well, I can't just give you one, well, then you're saying that it's not really a donation, is it? You've just made the whole raffle illegal by saying that. So if an auditor comes to your school and they say, hey, I see you have a raffle, can I have a raffle ticket? It's a trick. Give it to them. And here's the catch. They can't say, well, then I'll take 100 raffle tickets. You have to give them one for free. You don't have to give them an unlimited amount, okay? As long as you give them one for free, you're in compliance. You're not going to get in trouble. But absolutely, perfectly allowable, because now you're not requiring them to pay anything for it. So it gets rid of the whole game of chance definition. The other thing, and the thing that I've seen that done more commonly, is where the raffle is, they buy a raffle ticket. Oh, I'm sorry, not more commonly. I meant less. I don't see this as often, but another way to do it is simply you work with some local vendors in the community. You get somebody to donate a prize or whatever. Well, that's typical, but let's say, let's say the raffle tickets are $5, right? So every raffle ticket they buy, they get a $5 coupon at the local pizza joint or something, right? In that case, when the student buys the ticket, they did receive something of equal value, okay? They got something worth what they paid for. And so in that case, it's not a game of chance. It removes that part about it being only a chance of winning a prize, because they actually got something of value in return. And so in those cases, those are also legal to do, okay? But that does require other people to help out. I have a question in the back.
Yeah, so I understand that if someone asks for a ticket, then we have to give them one, right?
If you're doing that, yes, that donation.
So if somebody says, oh, okay, well, my donation is $5, is it okay for us not to give them 5 more tickets? Because then their chances are more than the person that just got the one free one, right? Is that still okay?
Legally, yes. You might have a problem with the person that only got one ticket for $5, but yeah.
I think what she's asking is, people that give a donation, would it be okay to give them more tickets than the person that I wanted a free ticket? You know what I mean? As opposed to just giving them one ticket for $5 and say, hey, you do a donation, we'll give you the same number of tickets as the amount of money that you give.
Mm-hmm.
As opposed to just saying.
Well, usually the ticket's printed on it, donation $5. Like for a $5 donation, you'll get one ticket. For a $20 donation, you get 5 tickets. It's usually printed on there. So if you do more than that, I mean, it's not it's not necessarily prohibited, but it could be considered unfair. So when I get back, and we're talking about cash disbursements now. We spent the last half hour or so talking about cash receipts. That's all the money coming into the ASB, and now we're going to talk about how to spend it, right? Because that's the purpose of all this. And the three main things we're going to look at under cash disbursements is proper approvals and the types of controls that have to be maintained and the benefit of the students, the purpose of the funds being spent. So those are three very important topics. Now, I did say that there are probably more audit findings in the area of cash receipts than anywhere else, but guess what is a close number two? Cash disbursement. It's also a significant area where there's a lot of audit risk, a lot of risk of fraud occurring and going undetected. And quite honestly, outside the world of ASBs, this is the number one risk area for fraud. And more frauds occur in the area of dispersing of funds globally than anywhere else. So we're going to focus specifically on ASBs and what the risks are there, but it's a very important topic. So here's one of those ed codes, and this is one of the few that really it gets very specific. Section 48933, section B. And what this says is that anytime you disperse ASB funds, you have to have written approval by 3 different individuals. A district employee designated by the governing board, that's typically the principal or vice principal. A certificated employee who's designated as the advisor. So those of you here who are advisors, you know who you are. And then a student representative. That's interesting. The law of the land, the education code, actually says that a student has to approve in writing any disbursement of ASB funds. All 3 of these signatures have to be there. They all have to be approved in writing. And so it's kind of nice when the ed code spells something out so specifically, because it means that you don't have to use a lot of that pesky, judgment. You can just say, oh, it's black and white. We have to do this. This is exactly how it has to be. So what most schools have is some sort of a form that looks like a purchase order or a requisition that has a line for all 3 of those signatures. And so the auditors are going to be looking for that, or we already have. I guess we were out there a few weeks ago. And to my memory, when I was looking at that, I don't recall there being too many exceptions in that area. There might have been 1 or 2 isolated cases, but I can tell you this was a pretty significant problem in 2020 and 2021 when we had COVID and kids were not at school and we were still trying to run ASB stuff, okay? But now that we're all back to in person and everything's back pretty much to the way it was, there shouldn't really be too much of an issue. The question still sometimes comes up, what about over the summer, if we have to have an approval for something before school starts? The usual response to that is if you look it up in the FCMAT manual, it's going to say you need to anticipate those kind of things before school gets out and get the students to approve them beforehand, okay? Especially if they're recurring things that they're going to come up every year, to get those approvals ahead of time, okay? In an absolute emergency, I've seen people violate. It's still a violation of the ed code if you don't do it. This doesn't say except when blah, 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 okay? But from an audit standpoint, if we see 1 or 2 isolated exceptions, we're not going to get into a tizzy over it. I mean, we're going to document it, but if it's being consistently ignored, that's a problem, because then it looks like the students really aren't in control of their funds. Question?
Does it matter if it's a wet signature versus a dry? Like, can they do a DocuSign type thing, or
Right. So the question is, does it have to be an actual physical wet signature on the document? And the answer is no. As long as you have some sort of process that allows you to get those kind of signatures like a DocuSign, then that's okay. The idea here is that you have something that can be documented. And then as a little side note, expenditure should also be approved in the student council minutes. So One word about this, though, that I want to bring up, and I want to make sure I don't have another slide that already talks about it. I don't think so. When you read the Ed Code, it actually says that those approvals have to be obtained in writing before dispersing the funds. So, before dispersing the funds. That means you can go out and purchase something without any approval, get the receipt, turn it in, and then the accountant only has to get those approvals before they write the check. Now, we as auditors think that that's, well, frankly, it's stupid. We suggest, and we always recommend, every time we see this, we always recommend that you get those approvals in writing before you even incur the expense in the first place, okay? So don't go out and buy something and then ask the students to approve it after the fact, because that's not really, that's defeating the whole purpose of it. The whole idea is that the students are supposed to have some say in how their funds are being spent. It's their money, right? You're there to help them with it. But I've seen it so many times, and I can be honest with you, that is the number one audit exception that we write in this area, is the fact that ASBs are failing to get pre-approvals. And I'm not talking about just your district. I'm talking about all the districts we audit. The ASBs are failing to get the approvals before they incur the expense. So many times where we'll see the invoice was dated November 1st and then approved on November 15th. So it's like, well, you buy something and then you ask for permission, It doesn't work that way. So anyway, even though legally you can do that, we don't think it's a good idea. So we think get the approvals first. Now, some check controls. And actually, before I get into all this, I want to talk, when I say check controls, this is kind of regardless of how you're generating payment. If you're using an electronic system that generates checks for you, or if you're paying checks electronically through the bank, however you're doing it, these principles usually are going to still apply no matter what the situation is. When I started my auditing career, yeah, they had checks back then. But no, it was very common practice for schools to have like those big checkbooks, like a big cardboard ledger that you would open and the checks were in there and then you'd write the check. And so there's a lot of potential for things to go wrong in that kind of a situation. Well, just for an example, how many of you have ever seen a movie, and I don't remember the year it came out, it was called Catch Me If You Can, starred Tom Hanks and Leonardo DiCaprio. It's based on, if you haven't seen the movie, or even if you have, it's based on a true story of a gentleman by the name of Frank Abagnale, who was a master check forger, embezzler, imposter. And I think it was during the 1960s, and he was able to steal millions of dollars. And one of the skills that he had was the ability to forge checks to make them look authentic, and he'd go to the bank and cash them, or he'd get he'd get letterhead from companies and make it look authentic. He did a lot of things in the movie that were really kind of funny and interesting too. But from this standpoint, yeah, he was able to do a lot of things, forging signatures on checks and making them look authentic. Now, in today's society, we don't see that as much. It's not as common because, electronic payment methods are getting more and more sophisticated. But some of these things can still happen. And so, believe it or not, there are still embezzlements that occur that way. So anyway, when we talk about check controls, appropriate supporting documentation should be present before a check is written. So for those of you who are accountants, bookkeepers, whatever your title may be, if you're the one who writes out the checks for the ASB, you have an important responsibility. You're the gatekeeper, okay? That means you're the last defense. You're the last thing standing between the students and their money, right? So you get to write out a check to pay a vendor. before you do that, you have to have appropriate supporting documentation. And so what do we mean by that? What's appropriate supporting documentation? Well, I can tell you as an auditor what we're looking for is 3 things. We're looking for, number 1, the proper approvals that we just talked about on the previous slide. We're going to look to make sure that there is a document that shows that all 3 of those individuals, the principal, the advisor, and a student, signed off on this item, that it's been cleared, it's approved, okay to go. Okay? Now, as auditors, we do that extra step of making sure that that was done prior to the actual expense being incurred. But the second most important thing here is an invoice or a receipt, some sort of document that shows what we're writing this check for. Okay? If it's an invoice, let's say, we purchase t-shirts just for a fundraiser, right? So I'm going to look to make sure the vendor looks appropriate, if that's a vendor we've used before or one I've heard of, it's not just Joe's t-shirts, well, it could be that, but I mean, it has to look like a legitimate invoice, a legitimate expense. I want to make sure that the items, the quality, the quantities ordered, the pricing, everything ties out. If there's sales tax, I want to make sure that's included. I want to look at the invoice and kind of do a little mini audit on it and make sure that the check I'm writing matches what's on the invoice, okay? Because the auditors are certainly going to be looking at that. And the reason I want to be so careful is because there are a lot of fictitious vendor schemes out there where somebody will embezzle money by submitting false invoices, and they can do that very easily. It's very easy to generate an invoice that looks real. You can, there's lots of spam out there, as I'm sure you've probably all seen in your email, but people are getting very clever about generating invoices that look authentic, and they'll send them out, and companies will sometimes just pay basically on an invoice without even knowing what the goods are for. So it's very important to make sure that you have that invoice. And then the third most important thing, and sometimes gets overlooked, is proof of receipt of those goods or services. And so whatever you're paying for, you want to make sure that you've gotten those items, or if it's a service, that service was already provided. With some exceptions, obviously, in the case of your yearbook where you have to make a deposit, you don't have any actual physical goods, but you have an invoice that says, hey, you have to put a deposit down on the yearbooks. That's an exception. But most of the time, you don't want to write a check to a vendor until you've actually gotten what you're paying for. And a case in point here, worked with an ASB once that did a t-shirt order, and it was several $100s. And what happened was they placed the order, the vendor shipped out or sent out the invoice, the ASB bookkeeper got the invoice, paid the check, they never got the t-shirts. And the check got cashed though. And when they tried to track down the vendor, they were unable to do so. The phone number was disconnected and everything. They were out the money. And that was because the accountant just wrote the check without ever verifying that, hey, these goods came in. So it's very important to make sure that whenever you're writing a check, somebody signed off on the invoice, okay to pay or received or something of that nature. If it was a service that was being provided, that those services were provided. And like I said, there are exceptions if sometimes you have to pay for something in advance, but if that's the case, you want to make sure that somebody okayed that as well, like somebody else whoever coordinated that. Like I said, the yearbook's kind of a known thing. You have to do that every year, but if you're ever asked to pay something in advance too, you want to make sure that it's okay, that somebody is saying, yeah, that's okay, we talked to the vendor, but it's whatever. So be very careful about that. You want to make sure that you're not doing that. That's another thing that the auditors will be looking for. Checks should always require 2 signatures. This is a very old-fashioned rule, but it's one of those oldies but goodies. The idea here behind it, and I know this is quite a stretch here. The idea here is that if somebody is putting their signature on a check, that they're actually looking at what the check is being paid for. Okay? And if they're doing that, then two people looking at that is always better than one, because it prevents one person from being able to have a check written to themselves or to something else for their benefit. Way too many times have I seen situations where a check signer just blindly signs the checks and doesn't even look at the documentation, doesn't even look who the payee is on the check, doesn't even look at just sign, or gets a stamp and just stamp without looking at it. Sure, I know you've got a lot of other things to do and you don't have time to sit there and audit every check, but just know that when you're putting your signature on that check, you're authorizing that payment and you're just blindly trusting whoever gave you that. And that might be perfectly fine most of the time, okay? But in the audit world, we have a saying, it's trust but verify, okay? So we don't think trusting employees is a good internal control, okay? It also doesn't mean assuming that everybody's stealing from you, okay? There's a fine line there, you know? You can't go around accusing everybody of being a thief, but at the same time, blind trust does not function well as an internal control. I guarantee you, every single person that's ever committed fraud got away with it to a point because somebody trusted them, put them in a position of trust. And somebody that they worked with thought, oh yeah, they're trustworthy. Check signers should not sign checks made out to themselves. I can tell you how many times I've seen this as an auditor. Payee, payable to Jeff Nigro, signed by Jeff Nigro. Okay, as an auditor, that's one of those red flags that pops up and say, ooh, look at this one, because that doesn't look right. So when we're doing the ASB audit and we're out at the school, we look who the check signers are. And so we'll look down the list of checks, and if we see one payable to that person or one of those check signers, we're going to pull that one, almost guaranteed. Not every time, but you know, those ones are going to pop up and definitely be looked at carefully because it's a red flag. It doesn't mean there's anything inherently wrong with it, but it certainly does look suspicious. So just avoid that altogether. If you're a signer on the check and you have a check that's being made payable to you, get the other two people to sign it. We generally say the bookkeeper, the person who has the checks, shouldn't be one of the authorized signers on the account. The objection we get to that every single time we bring this up is, well, if I'm not a check signer, then I can't access the bank account and blah, 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 blah. To which I say, BS. Most banks will allow you review access even if you're not a check signer, or if they don't, then you need to get another bank, because most banks will do that. They'll say that, you know, you can have somebody authorized to log in and review and you know, monitor the accounts if they're not a signer. And then just, this is a small thing, but voided checks should always be retained in the file. You know, you start writing a check and then you realize, oops, I accidentally made that check payable to myself by mistake. Oh, I meant to write the other vendor on it. I got to avoid that one. So you cross it out. You write another check. That check needs to be kept in the file, because if not, it's going to look like there's a check missing when you're looking at all your outstanding checks, and it's going to cause a question. So you just keep it in the file. And as somebody who used to work in a bank, I can tell you the best thing to do with a voided check is to just cut out the signature portion of the check. That's called mutilating the check. That basically prevents it from ever being reused or cashed. So anytime you void a check, cut out the signature section, keep it in the file. And then finally, checks should never be made payable to cash. Okay? Checks should always have a payee. If you write cash on the payee line, that check now becomes as good as currency, because any person in the world can pick that check up and cash it. Okay? So in the situations where you actually need to get cash, let's say you're going to have a fundraising event, you need some cash to start up the cash boxes or something, whatever, make the check payable to a person, and that person will then go to the bank and cash it and bring the money back. if it's payable to cash and they're on the way to the bank and they lose that check, any bum on the street can pick it up and cash it, and maybe you made an accidental donation, but not a good practice. All right, now that we've talked about all that, we're going to talk about proper use of the funds. And this, even though I said the other area was the area where we find the most audit exceptions, this is the area where we get the most questions. This is probably one of the most confusing areas. So I'm going to give you a little history lesson here first. Because I started my auditing career in 1991. And back then, there was a section in the education code that had what they called prohibited expenditures. So there used to be something that the education code said ASB funds cannot be used for these purposes. And it listed out 5 things. And they were things like, curriculum, anything for the classroom use, district materials and supplies or equipment, blah, blah, blah. 5 things that prohibited by law. Unfortunately, a couple of years later, that section of the education code got removed. There was some language in some other part of that whole that got taken out, and they threw out the entire section of Ed Code, which basically left auditors with the situation, well, if they remove those as prohibited expenditures, does that mean they're allowed now? And they've never addressed that, okay? So in the world of, what can we spend ASB money on, we're kind of left with this vague kind of gray area now of just being able to tell people, well, it's not a good idea to spend ASB money for these things. So obviously there are some things that would be plain downright illegal, but there are certain things that fall into a gray area. So I think for the most part, most people know what their ASB funds can be used for. The district board policy may prohibit some things. But just some issues that usually come up. I always point back to this thing here. Remember that slide that I said was the most important one? About what's the purpose of ASB funds? It's for the students' general welfare, morale, and educational experiences. So, like I said, most ASB expenditures are pretty clear cut. Yeah, that's perfectly fine. It's the gray area. It's the ones that are on the fringe of, well, I don't know. So those are the ones I want to talk about. And so the question I always ask is, one thing I'll ask is the newspaper headline test. If somebody says, can we spend ASB money to buy this or that? So the newspaper headline test. If that purchase were to be published in the local newspaper, such and such high school spends student funds for this, as a principal, would you be okay with that? Would you feel comfortable defending that to the people in the public, to the community? If so, go for it. If it makes you feel a little uncomfortable or queasy, then you probably shouldn't do it. That's one test. Obviously you have to ask yourself, is this a benefit to the students? How is it a benefit to the students? We want to buy t-shirts with the school, or polo shirts with the school logo on it for the faculty. How's that a benefit to the students? That one's kind of dicey. Or, we're going to have a pizza party for the faculty and use ASB funds to pay for it. I get asked that one sometimes, and I usually say, I don't see how you're going to be able to defend that as a benefit to the students. Well, if the teachers are happy, then it's better for the students. Yeah, you try that one. So those are some of the issues that come up sometimes. So like I say, it's a lot of gray, and I always feel bad about talking about that because it was so much easier when you could say, boom, these are not allowed. Okay? So it leaves us with these questionable expenditures, and so generally what I say is, avoid, if it's questionable, just avoid it. Okay? Gifts or loans to employees, I hope that's kind of common sense, that you wouldn't be using ASB funds to make loans to employees. Like somebody's having a rough week and their paycheck doesn't come until next month or next week, and we're going to borrow ASB money to tide them over. That's going to look bad. Gifts to employees, I mean, again, that one gets real tricky because here's the thing. This comes up sometimes. A teacher who's worked in the school for 30 years is retiring, and the students want to get together and give them a going away thank you gift, right? Can we do that? And I have to be the one that always says, well, I'm the heavy, okay, right? No, it's a gift of public funds. Student body funds are public funds, but the students approved and they want to do it. Doesn't matter. It's still a gift of public funds no matter how you slice it. Well, what if we have a policy that allows gifts up to $25? Well, you have a policy that allows you to do something illegal. So that's okay, right? That's what they want me to say. So you can't get around the fact that giving gifts of any sort out of ASB funds is a gift of public funds. That being said, if you have a policy and you don't think it's going to be a problem and everyone's aware of it and you have a de minimis amount, that's probably okay. So it's one of those things where I've said, you know what? They want to give them a $25 gift card to Olive Garden. I'm not going to cause a stink about it. I'm not going to make an audit exception over that. But they want to put him and his wife on a Mediterranean river cruise for 3 weeks. It's going to cost $5,000. Well, yeah, that's going to be hard to look the other way. So that's probably not going to fly. So it's one of those gray areas where, again, I would say, why would you even want to take a chance of doing that? I have seen situations where the students did a fundraiser because they wanted to raise funds for a local family that had like a tragedy, like their house fire or something like that, and they wanted to raise funds for that. Well, that gets into a whole other thing that I want to talk about, but that's probably okay, if they're doing a fundraiser for that specific purpose, okay? But again, any money that's given from ASB is public money. That's student, and the California Constitution does prohibit any gifts of public funds. So you have to find ways to work within that. Obviously, district curricular materials or supplies, you shouldn't be using ASB funds to buy textbooks or anything that's being used in the classroom. We'll see things like sometimes they want to purchase a computer. Well, who's it for? It's for the ASB office. Well, if it's for the ASB office, that's fine. But, if it's in a classroom, then, how's that benefiting? How's that for the ASB? Donations to outside organizations, that's the one I want to talk about that I was kind of alluding to before. This comes up quite frequently. There's a tsunami that hits Hawaii, right? And there's a bunch of people that are out of their homes and there's terrible tragedy. Makes the news. The students say, you know what, we want to donate money to the American Red Cross because they're over there helping and we want to give. Now, as educators, I'm sure you all want students to learn about philanthropy and donating and doing good stuff like that, right? So we want to encourage that. We don't want to tell them, you can't, it's illegal to donate money from ASB to an outside organization. It is, though. But here's the exception. And this is what, if you look in the FCMAT guide, this is what they recommend. And so this is what we always tell people. What we would say in those kind of situations is what you want to encourage is if the students want to do something like that is to hold a fundraiser. Have the students hold a fundraiser for that purpose. We're going to have a fundraiser to raise funds to give to the American Red Cross to help the victims of such and such. Now, if you've advertised that's the purpose of this fundraiser, any money that's collected from that fundraiser goes into a special account on the books for that purpose, and then all that money at the end of the fundraiser is written out as one check, and it zeroes out. In and out, zero, clean, like it was never there, okay? That's allowed. That's perfectly fine, because now you just basically acted as a middleman, kind of a conduit, basically, for passing funds through. So that's allowable, but to just say we want to help them out and write a check and send it to them, that's a gift of public funds. So it's a very, very fine line.
What if they're
Mhm.
And they want to figure out ways that they can help the houses, and that's why they exist.
Yeah, I think if that's their whole purpose and it's known, then any money they raise is going to be for that purpose, and I think that's okay. I think the whole idea is, again, that any funds that they raised, it was known in advance that that's what they would be used for. Yeah. But it is,
Because we have a similar program, we have that for you already, or there's another one. We got district, or board approval, so it's within their charter, their constitution,
Mhm.
we have, that's what the club is for.
yeah.
Yeah,
Mhm.
so that's fine.
Yeah, and I know a lot of schools have like an annual fundraiser that's a certain, for a certain cause or things like that. The idea here is that it was known in advance that that's what they would be raising funds for, as opposed to, I guess the fear here is that a parent could donate money to a fundraiser not knowing what it was going to be used for, and then, let's pick a completely random example, okay? School had a family that was, an impoverished family that they wanted to raise money for and give them money to, help them through the holidays, right? Well, that's great, except for some other families might say, well, wait a minute, what about us? And then it can cause a lot of problems. And you kind of have to get back to, the ASB isn't there to exist, it's for the students. So when they want to do those types of things, yeah, you have to really just be very careful and follow these guidelines. But it's like I say, it's a gray area. Here's another one. Sometimes comes up, equipment purchases. So the ASB wants to buy a sound system for the gym for the dances, or they want to buy a camera, expensive DSLR camera for the yearbook club or whatever. No problem. They can buy equipment, no issues. But as a good best practice, what they should be doing is if they buy expensive equipment, should always be purchased in the name of the school district, or at least donated to the school district when they buy it. The reason is insurance. Because if it's a district piece of district-owned piece of equipment and something happens to it, it's covered through the district's insurance, and now it can be replaced. But if the ASB buys it and it's not under the district's insurance, you're on your own. Okay, so any types of things like that always should go through, be donated to the district, and then the district basically gives you the exclusive right to use it or whatever. But that's an insurance protection. A couple of areas that come up. FCMAT FAQs, frequently asked questions. Gift cards. Now, I realize, oh, yes.
Sorry, I have a quick question on the equipment part of it.
Yeah.
What would you suggest be the monetary, how much money would be considered to be equipment? Because I have the boys soccer coach. He wanted to purchase some soccer balls because they were out of soccer balls, corner flags, and some other stuff where I was kind of like, I don't know, because that's something that you kind of are required to have for a game, corner flags, right? But then I'm like, well, if you want to have them certain color, only boys soccer can use it, then yeah. What would be, let's say they wanted to purchase something else that's more expensive, what would you suggest be that money line, I guess?
I'm looking at Nikki here because what I would do is suggest that you talk to the business office and see what they say. It might depend on what your deductible for insurance is, because
So the only thing that we've encountered that we've asked a school site to donate to the district was they actually purchased a golf cart. And so that was big enough that it affects our insurance and it needs to be added to our insurance. And so we authorized the purchase, but then it was donated to the district twofold, so that our risk management department was aware of it, added it to our inventory, but also, so now the district was responsible for the maintenance and care of that item, because the only way it's gonna stay in good use for the ASB or for anybody is if it's properly maintain, and we didn't want to put that burden on the students to have to maintain the regular ongoing maintenance of a vehicle of some sort. So in the past, the only thing we've really seen are items that are, that actually we need to reflect on our insurance that is an additional item. Now, you see some, like some classes buy like, little pieces of, I wanna say like a yearbook class has asked for a different type of like photography camera or things like that. We've never had them donate those, but we're aware of the purchases and we have that paper trail and we should be okay. But the big ticket items, I know for sure the insurance companies are gonna want you to name those on your insurance policies to show that you have those items. So like I said, it was something very large that we caught wind of. And so if you see something like that, then that would be something you want to put on our radar. So I would say, if you're in doubt and you think it's something big, you know, just shoot your accountant a message and then we'll take a look and see if it's something we want to add. And typically I'll involve Eric from risk management just to see, because he handles our insurance items.
And thank you. Well said. Hopefully that all got on tape. We put in this slide here that I know this slide violates the basic rule of PowerPoint, which is don't put too much stuff on the slides, okay? But I'll break it down for you. Essentially, two main questions come up a lot of times. I think the second one there we just talked about, which was support for charity, okay? So we already kind of talked about that. But the first one concerns gift cards. And I can tell you, anyone on our audit staff, or any audit, or for that reason, the minute we hear about gift cards, our ears perk up. Like, uh-oh, danger, danger. Gift cards can be purchased in certain situations, okay? We usually say, don't deal with gift cards, okay? There's too many things that can go wrong. Gift cards are another way of just giving out gifts of public funds, okay? Essentially, I'm not going to read this whole thing, but if you want to give out gift cards as student awards, you have to have a board policy, because that's usually, here's how it goes. A client will ask us, hey, we want to buy gift cards, and their ASB wants to buy gift cards. Are they allowed? First question we ask is, well, do you have a board policy on that? Does your board policy allow giving gift cards to students? Now, the Ed Code does allow gifts, not from student funds, but the district can give awards to students for for excellence, perfect attendance, or some sort of academic achievement or something. The Ed Code does say districts can have a board policy that allows to give awards in those types of situations. And they're talking about the district, not the ASB. The ASB, again, ASB funds may be used if the funds were specifically raised for such awards in an appropriately approved fundraiser. So it kind of works the same way that I talked about with the donations to charities or to public other organizations. To just go out and buy a bunch of gift cards and hand them out to students, that is just giving away public funds, and that's not allowed. So anytime we see gift cards, like I say, my first reaction is this. Ooh, all right, tell me more. And so tread carefully. I would say there's a whole section in the FCMAT guide that talks about this. To read it, be familiar with it. Make sure that you're talking to the district and you understand what the district's board policy is. I don't have that memorized, I apologize, but I know generally to give away gift cards is not a good idea. Here's a suggestion. Work with your local vendors and say, hey, would you like to donate some gift cards to us? That's okay. Now let's say a local pizza joint decides they want to do a publicity thing and they want to give you a bunch of gift cards to give to your students for an award. Fine, have fun with it. Give them away. Decide however you want to do them, because you didn't buy them. You didn't use ASB funds to pay for them. So that's a different matter, okay? But yeah, they're just like cash in a way. So you have to think about it as those are public funds. Once again, it's student money. So to take money from the ASB, that's for the whole ASB, and you're going to say that we're just going to take all that money and we're just going to give it to a very specific few students' benefit. That's kind of violating the whole point of the ASB again. So again, a lot of gray areas, but just some general guidelines to follow. Now we're going to turn the corner a little bit. We're going to talk about my favorite subject, accounting. And just what you want to hear in the 3 in the afternoon is hear a CPA talking about accounting. But I will try to keep it brief and painless, I promise. Just some general concepts here of financial reporting. The reason there are accountants, the reason accounting exists, is because we want to be able to keep track of our money, right? The idea here is you want to make sure you know where all your money is and where it's going or where it went, right? So you've got your basic financial statements. Now, most of you are using some sort of accounting software, I believe, probably. I don't know what you're all using. I don't know if you're all on the same system or not. Does somebody know if you guys are all on the same?
Yes.
ASB Works? Great. 90% of California ASBs are using ASB Works. That might be a high estimate, I don't know. But that's definitely the most popular one. So every month you're going to generate a balance sheet and a profit and loss statement. Balance sheet is a snapshot of how much money you have right now at this point in time. Boom. Okay. Profit and loss statement, that shows how much money you brought in, how much money you spent, how much you have left over. Okay? Very simple. Other types of accounting reports is going to be the bank reconciliation and inventory if you have a student store. Now, bank reconciliations, I think we want to look at a little more carefully, because most of you in here are doing some sort of a bank reconciliation process, hopefully monthly. Hopefully. Because if you're not doing it monthly, you're probably having an audit exception. These have to be performed on a timely basis, because all we're doing on a bank reconciliation is we're saying, here's how much money the bank thinks we have, here's how much money we think we have, here's what all the activity the bank knows about that we did, and here's all the activity that we know that we did, and you're just comparing the two. Now, if the bank shows some transactions that you don't have recorded in your books, you need to figure out what happened. Banks have been known to make errors, believe it or not. So sometimes they may have posted an incorrect transaction in your account. Or maybe you have some activity that you've done that the bank doesn't know about yet. So we reconcile that at the end of the month and we move on, okay? That's what a bank reconciliation does. We want to do that every month, usually when the bank statement is issued. Try to get that within 1 to 2 weeks after the bank statement's issued. If you let these things back up too much, not only is it extra work, but you might have an error that occurred months ago that you're just now finding out about. Okay? Maybe you see a check that got posted to the bank account for $100, but you had it recorded in your general ledger as $10. You left off a zero by mistake. Or maybe the bank coded it for $100 and it really was for $10, so it's the bank's mistake. Either way, you've got a $90 error sitting in your books. So those are the types of things. You want to make sure you're doing them timely. You don't want to let them go for months and months at a time. Not only will it be an audit exception, but I can tell you, as auditors, late bank reconciliations are one of those red flags that we are trained to look at, because oftentimes when there is an embezzlement or a fraud occurring, the person that's doing it isn't doing bank reconciliations because they don't want to show a bank reconciliation. They're afraid it might uncover their activities. So a good practice is to also have the ASB treasurer, somebody on the student council, be looking at the bank recs every month. Most ASBs don't do that, but it's just one of those things that I say, hey, get them involved too. But having somebody else other than the person that did the bank rec reviewing it and signing off on it is a really good practice too. And that person should be sort of trained on what to be looking for, matching up checks and things like that. I know it's more work, but it really is a good check and balance to have in place. Annual audits. Sure, I'm biased here, I know, but I'm going to say what I have to say. They're a very important part of the district's internal control. Now, here's the thing. I always compare an audit to going to the dentist for an annual checkup. Nobody's excited about it. Nobody's looking forward to it. It's one of those things that you have to do, right? And you know that the dentist is going to do some things that are going to feel uncomfortable and maybe scary. But at the end of it, if they give you a clean bill of health and tell you everything's fine, at least they were thorough and they looked, right? You wouldn't want a dentist who just says, open your mouth and, okay, everything looks good, you can go. I mean, you might feel good in the short run, but you might be thinking, well, wait a minute, what if, so you want them to be thorough, but you also hate to hear that news like, oh, yeah, you got a cavity, we got to do crown, all this other stuff. You don't want to hear that, but if they're doing it, it's because it's their professional opinion that this is a problem that needs to be addressed, and if it isn't, here's what's going to happen, okay? And that's how I look at an audit, okay? The auditors are not, here's a secret, a trade secret. Our auditors are not paid by the number of findings they get, okay? They're paid a straight salary, so whether they come in and find no problems at all, or whether they find dozens of problems, they're getting paid the same. So they have no incentive to come in and find lots of problems in your situation, in your books, okay? If they do, it's because they're doing what they're supposed to do, which is spotting potential problems, finding gaps in your internal control. Basically, what we tell them is, look at the situation as if here's a situation where somebody could steal from you if they wanted to and they could get away with it, okay? It's up to you to decide how you want to address it, or if you want to address it, or if you want to say, it's too much work, I'm not worried about anyone stealing from us, everybody here's honest, that's fine. I'll show you later what can happen in those situations, but that's essentially what it is. So they're just basically making their recommendations. They're not the enemy, believe it or not, okay? I know the word auditor kind of gets a bad rap because people think of the IRS when they think of an audit, right? And those auditors are bad. My wife could tell you stories. She does taxes. She deals with those kind of auditors. But our auditors are not there to, we're not there to get you in trouble. We're there to keep you out of trouble. That's the way I look at it. So just quickly, the audit's done in a couple of different phases. We've already completed the first phase, which is the interim phase where we'll come out to the school. Not all of you got visited. We test different schools every year. We'll rotate around. If you have the auditor coming out to your school every year, that's usually either because the district told us to or because we found a lot of problems in the past and we want to make sure they're being addressed. But for the most part, we're going to the schools and we're just really looking at your internal controls. We're going to sit down with you and ask you a bunch of questions about what do you do about this, what do you do about that, and then we're going to trust but verify. We're going to take what you told us and we're going to check it out. We're going to look at some transactions. We're going to look at some bank deposits. We're going to look at some checks. And then when we're done, we're going to issue a management letter and we're going to tell the district, here's what we found at this school. Everything's clean. They have tons of problems, whatever it might be. And just kind of let the district decide what to do with it. Now, the final is when we come out to the district office in the fall, after June 30 close, after your school year's done, we're going to come back around September, October or so, and we're going to say, okay, we want to see the final June 30 balance sheet, income statement, bank reconciliations. We're going to go through, we're going to take a look at it. We're going to look and see if anything looks unusual, and if it does, then we're going to probably either schedule a visit to come back out to the school, or we're going to maybe call and just say, hey, I noticed this looks really odd. What happened here? So Generally not as intense, okay? But that's really how the audit's done. Now, obviously, the business office is there to support you. There's Adriana. I was going to say all my district office people left, but there's still one or two of you in here. But essentially, the district's going to provide support by offering training, which is, guess why we're here today. Technical advice, assistance and support, oversight and monitoring. Those are all the things the district hopefully is doing. I think they are doing. You're not on your own out there. There's a bunch of other schools in the district, obviously. I'm sure a lot of you, some of you probably work with each other or help each other out when you have questions. I always encourage that, especially in a larger district like this where there's several high schools where you can all kind of say, hey, we're coming across this situation. Have you seen this before? Have you worked with this vendor? What do you know about them? Talk to each other, support each other, okay? This is an old slide that shouldn't be in there. That had to do with when school was closed and kids were out and there were some issues that had to be dealt with, so we'll skip that one. And now we're going to talk about my favorite topic, which I always save to the end, is fraud prevention, because I don't know if you noticed on the opening slide, it says my name, then it says CPA, and then it says CFE. So a certified fraud examiner, that's what I am. So in addition to being an auditor, I'll occasionally do forensic examinations, fraud examinations. It's an extremely interesting topic to me because there's a lot of things that happen in fraud that are very easily preventable. If one or two people had only done something different, they could have been prevented. But fraud's everywhere. And I can tell you during the pandemic, it spiked. Fraud was going nuts. And fraud's always going to be there. I just think it's one of those elements of life. It's just, So what we're going to talk about is we're going to profile. We're going to profile people who commit fraud. So we're going to kind of look at the criminology side of it. Like, what's the makeup of the type of person that commits fraud that embezzles from their employer. And we're going to focus obviously on ASB, but we're going to look at common ways to commit fraud, which is not a to-do list. It's simply, I believe that in order to prevent it, you have to know how it's committed. And then we're going to finally talk about how to prevent it from occurring in your ASB, right? Because nobody wants to be the subject of that newspaper headline, right? So, first of all, I did want to, I do have some headlines, okay. So, who commits fraud? So, we think of the flashy used car salesman kind of guy that's lying through their teeth. Trusted employees will often commit fraud. Most of the time, in order to commit fraud, somebody has to be in a position of trust. And like I said earlier, too, most of the times if you've seen anything in the news or watched any documentaries about white-collar criminals, they were always in a position of trust. There's a documentary I want to recommend to you guys if you're interested in this sort of thing. It's called All the Queen's Horses. Now, I will say that it used to be on Netflix. I don't think it still is, but it's probably out there somewhere, even on YouTube maybe. But it's a documentary, it's a true story about what happened in a little town called Dixon, Illinois. And it was the largest municipal fraud in the country's history. A woman embezzled over $50 million from this city over the course of 20 years. Obviously not all at once. She did it little by little. Now, she was the city controller, so she was in charge of all the finances for this particular city. There weren't a lot of people in the finance office. So she was able to go down to the bank and open bank accounts, and she opened a specific bank account that had some kind of vague name on it, like something fund. And she was the one who opened the account, and she was the only signer on the account. And what she was able to do was when a lot of payments came into the city for certain types of things, she was able to get some of those payments and deposit them into that fund without anybody knowing. And over, like I said, there were checks for $50,000, $100,000, $150,000, just little by little over the years. During the last several years of this crime, the city was having to cut positions. They were not giving raises to people. They were withholding cities or services that needed to be provided. But she was living high on the hog, and it's called All the Queen's Horses because she was really into horses. And so she raised horses. She bought like these hundreds of thousands of dollars horses, like that were show horses that were, people were coming there to have her breed them and all this kind of stuff. And she went to horse shows, and she was very popular in the community. Everybody loved her. Everybody knew her, but they all knew that she had this big ranch and she had all this money. And in the documentary, it's interesting because they talked to people after the fact, and all these people were like, yeah, we just assumed that she inherited some money or something like that. Or, we just thought she did a really good job of saving, because her salary was like $90,000 a year. It wasn't enough to be living that kind of a lifestyle where she had, like a $200,000 horse trailer. So yeah, and everybody was just in utter shock. Like, I can't believe she was doing this. Everybody trusted her. Everybody loved her. She was well known in the community. I mean, just super popular. And the whole time she was stealing from them. So I always point people to that because it's a great illustration of how somebody in a position of trust can violate that situation. Now, the question you might be asking is, well, how did she eventually get caught? And I don't want to spend too much more time on this, but I just think it's such a valuable lesson. What happened was she was out of the office, on vacation or whatever. She took a lot of those. Although a lot of times fraudsters don't take vacation. You'll find. But anyway, she was on vacation. The bank called and said, hey, I need to talk to Rita. And they said, well, she's not here. She's on vacation. Can I help you? And they said, well, we have one of your bank statement accounts got returned to us. Should we just, can we just have you come by the bank and pick it up? And they said, yeah, what bank account? And they read off the bank account name and number, and the accountant there was like, oh, we don't have a bank account like that. And they said, well, you do. And so they brought it in, and so the accountant looked at it, brought it to her boss and said, this is an account that's got like all this activity in it, all these checks being written out, and Rita's the only one who signs on this. They called the FBI. The FBI did an investigation, and boom, she got caught. That happened in 2012, and I think she just recently got out of jail, like on parole or whatever. But yeah, it's a fascinating story. $52 million or something like that was the final outcome. So yeah. Anyway, on that note, but just to illustrate the point that a lot of times it's the person who's in a position of trust. In their case, blind trust. No checks and balances. Everybody, she just could do whatever she wanted. And I will tell you that probably 90% of the time or more, when somebody's in that position, they're not going to violate it. They're going to be honest, but every now and then somebody can violate that. And in that case, it was to the extreme. But don't think trusted employees are the only ones that can commit fraud. Sometimes new employees can do it too, because they don't have that loyalty to the organization. They might just, see an opportunity and seize it. So I don't have a documentary to recommend for this one, but that's just... oftentimes it's, you'll hear about, a lot of stories about somebody that was embezzling money from their employer, and you'll find out that they were under great personal or financial stress, right? They were stealing because, here's an example. We had a client where we found it was about $5 million that had been embezzled over, 10, 15 years. And the reason the person was embezzling is because their son was in a lot of legal trouble, and she was paying his legal bills for him. And so the way she couldn't afford to pay the lawyer, so she started borrowing money from the school district where she was working. She was responsible, now this wasn't ASB, but she was responsible at the district for collecting receipts from payments from parents for childcare. And so there were a lot of payments coming in for childcare. So she was depositing a little bit not to make it look too bad, but then she was keeping a lot of it for herself. She was falsifying the records so that instead of $1,500 coming from that school for that day, she made it look like $500 came in from that school for that day. So she was getting away with it for quite a while until the district started comparing schools in the district and noticed all these other schools were collecting about this much money every day and this school was collecting about this much money every day. And they started wondering what's going on. And ultimately she got caught too. But she was driven to do that because of financial stress, financial pressure. And case after case comes to mind. I know another one I worked on several years ago where the person was basically paying their rent or making their car payments by using district funds because she had access to the vendor system and she was able to go in and generate checks without anyone seeing. So it's not always motivated by greed. Sometimes it's necessity. And when I said that during the pandemic that fraud was really on the rise, a lot of it was because you had people in maybe a 2-income household where one of the spouses ended up getting laid off from their job and now this person's the sole financial support for the family, and so they found a way to supplement their income. So there's a lot of things that can drive somebody to commit a crime. A lot of people who normally wouldn't, but if they are put in the right situation, well, I say the right situation, the wrong situation, with the right amount of pressure applied to them, they might do something that they otherwise wouldn't do. Okay? Now, in the ASB world, we've seen frauds that have involved principals, students, advisors, as well as teachers. So the bottom line is anyone can commit fraud. Okay? So again, as auditors, we use this professional skepticism approach. We say that you trust, but you verify. You don't automatically suspect that everyone's stealing, but at the same time, you can't just blindly trust people. Okay? Now, some true crime headlines that have involved ASBs. There was a high school in Anaheim. This happened about 3 years ago, or 4 years ago, 2019. An ASB clerk there had admitted to embezzling over $700,000. Again, over the course of a few years, it wasn't all at one time, but she was also making checks payable to herself and to family members. So what she would do is she'd make the check out. When it would come back, she would erase her name on the check and put the name of a vendor so that if somebody pulled the check, it looked legitimate. But what they failed to do was flip the check over, look at the endorsement on the back and see that it was her signature. So she was doing that for quite a while, trying to get away with it, trying to do enough so that it wouldn't draw attention, but at the same time, over $700,000. But she eventually got caught. Out in Desert Hot Springs, same county as Riverside, right? But on the desert, another employee. Now that one I don't know about other than the headline, so I can't tell you exactly what happened there, but $350,000 over 16 years. If you do the math, that's not a tremendous amount each year, but it's enough, obviously. But eventually she got caught. And in Temecula, you may have read about this too. Another a bookkeeper was accused. Now, that one I didn't work on personally. I don't know what the outcome of that one is, but so you can see that there's a lot of stuff that happens in ASBs. That's just Southern California. You can search ASB fraud, ASB embezzlement, and you'll find all kinds of stories. So those are just some of the recent ones. So some of the common ways that fraud is committed is, number one is what we call skimming, and this is probably the easiest way to commit fraud, requiring the least amount of thought. Doesn't take a criminal genius to be able to steal money out of a receipt, out of a deposit before it gets to the bank. You have a fundraiser, you collect money, and you only turn in a little bit of it, and you keep the rest for yourself, okay? That's probably the most common way. Other types of fraud, it would be destroying, altering, or voiding cash receipts and keeping the cash. So the person that's collecting the money commits the fraud in this case. They get the money, they write the receipt, but then they alter the receipt later, alter the cash register tape later, and keep some of the cash for themselves. And that's called, the first one's called skimming, the second one's called larceny. Just some legal terms for you there. Using personal expenditure receipts to support ASB reimbursements. So this was a situation where somebody went to Costco and purchased, $200-300 worth of goods, groceries, or whatever, and turned in the receipt for it and got reimbursed, even though none of the items on that receipt were for ASB. They were basically buying their groceries for that week or month or whatever. So the ASB basically paid them for personal items, but because it looked like a legitimate, thing. Now, you might be thinking, well, wouldn't the bookkeeper have asked, what's this for? Yeah, they should have, right? So see, you're already thinking about internal controls. Another way to get away with a similar type fraud is in the same situation as before, except this time the Costco receipt was for actual ASB items. They were legitimate, okay? So what they do is they turn in the receipt, they get reimbursed. So far, no crime's been committed, right? They bought a bunch of stuff for ASB, they got reimbursed, no, everything's good. Here's where the problem comes in. Before they turned in the receipt to the bookkeeper, they made a photocopy of it. They come back a month later, at a time when the bookkeeper's super busy, doing all kinds of stuff. They turn in the photocopy of the receipt and say, here, I need to get reimbursed. They get another check. They got reimbursed twice for the same purchase. Problem is, the bookkeeper should never have accepted a photocopy of a receipt for reimbursement. Okay. Preparing false invoices or receipts. This is where basically the person committing the fraud, the perpetrator, creates a false invoice, creates a phony, a bogus invoice. Like I said before, it's a very common type of fraud where they make it look like it was a legitimate, you have to try to make it look legitimate, obviously, so they make it look like it's a payment for a consultant. That's a common one. Or they create a shell company that has a P.O. box, and that P.O. box is a P.O. box that the fraudster has access to, and they generate some sort of an invoice that looks like it was a legitimate service that was being provided, and the victim pays it, and they get away with it. That last one, I'm not going to go into. That's an old one. Selling ASB property for personal profit. Now, this is kind of brazen, but basically, somebody breaks into the school, steals your expensive $3,000 camera that you just bought for the yearbook club, and then they go sell it out on Craigslist, right? That's kind of old-fashioned, but that's a fraud too. Obtaining blank checks and forging the signatures. So, somebody gets a hold of your checks. If you have, if you're using a check writing system, they get a hold of some blank checks and they forge the signature. They get cash or whatever. A lot of these seem like just more like outright theft than real, like clever or like white collar crime, but they're very common. And altering bank statement records to cover up missing deposits. That's not so much fraud in itself as a way of concealing fraud, but yeah, that's where if somebody's stealing, money from deposits. One of the things they can do is they can alter, they can make a $1,000 bank deposit look like it was only $100, and they kept $900 for themselves. And then this one's cute because this was a real story. Not one I worked on, but it's one I read about, where it was a vice principal at a high school, and she had ordered, she was using ASB funds, but they arrested her at her home, and she had like complete home entertainment system, washer, dryer, television, all this stuff that had been purchased with ASB funds. But she was just basically authorizing all these purchases, and they were just paying them, and nobody was questioning, well, why are we buying a washer and dryer for ASB? So again, it comes down to making sure that whoever's writing the checks is looking to see, what are we paying for here? And questioning it. So again, that's the kind of thing that can happen when somebody's given that authority without, just blind, unquestioning trust. So how do we help to prevent any of these things from happening? How do we keep Riverside Unified out of the paper in these kind of situations? Well, first of all, any internal control weaknesses that are noted in the audit, you want to work on those. You want to take them seriously. You want to get them corrected. You don't want to just say, it's just the auditors. They're just causing more problems. They're making us do more work. They're just causing us to do more red tape. It's not going to be a problem. Everything's fine. If you take that approach, you might be right, but again, you're not dealing with your own money here. You're talking about the students' funds, and you're put in a position of fiduciary responsibility to safeguard their funds for them. So you kind of have to take that seriously. And this one, I can't emphasize enough how important this one is. Everybody has to be on the same page, okay? That goes from the district office to the principal, to the coaches, to the advisors, to the teachers, to the bookkeeper. Everybody has to be saying the same thing, that yes, we're going to take these internal controls seriously. We're going to follow them. If you've got teachers and coaches that are going rogue and doing stuff and they're just flaunting the rules, there needs to be some way of reining them in or preventing them from having access to funds. It's very heartbreaking when we're at the auditors and we're out there and we find all these problems, and the ASB bookkeeper, I've heard this many times, tells us, I know this, I know we're supposed to be doing that, I can't get anyone to follow along. I can't get people to turn in receipts. They refuse, they won't do it. That's when I always want to make sure I tell the district, you got to get on the principal to get them to crack down on people, because if only a few people are following the rules, it's just making the risk go way up, okay? And it's jeopardizing those funds again. So, periodic internal audits, that's one of those things I feel obligated to say that, even though I know nobody really does that. But it really isn't a bad idea to just periodically do an internal audit. Just check on yourself, or have the district office come out, do a drop-in. Now, we come out as auditors one day out of the whole year for a couple hours, and we just look through a few transactions. If we happen to find a problem, we're kind of lucky. I've had people tell me, you have the auditor fairy because you pulled that one expenditure that I knew was going to be a problem. Like, well, I'm lucky that way. But a lot of times, we're not going to look at everything. We're not. There could be huge problems that we don't see. Okay. But you'd rather find them yourself, wouldn't you, rather than having the auditor find a problem? So, it's not a bad idea to have to do a periodic internal audit. And then finally is considering a fraud hotline. Now, this is something that I think, Nikki's not here, but you do have that. Now, is that for reporting, they can report any kind of, okay, good. Okay, so you do have something like that. Organizations that have some sort of a fraud reporting hotline, 50% of the time are 50% less likely to be victimized by fraud. And when they are, it's like a lot less usually. It's usually, they're not victimized as much. So the old adage is, if you see something, say something. One of the biggest ways to help prevent fraud is by everybody knowing that if you are asked to do something that you don't think is right, let's say a principal says, I want you to write a check to this vendor. I don't have any backup documentation. Don't ask any questions. Just write the check. If you're ever asked to do that and you feel kind of icky about it, you have a way to report that anonymously if you wish, right? It's anonymous. And, the the district can take a look at it, or they might even call us to come out and take a look. So make sure that everybody's kind of looking out. And again, I can't emphasize this enough. This is not your money. This is the student's money. You're being placed in charge of it. So you're there to help them. So that's my big scare speech. But with that, I'm done. And I'd be happy to answer any questions.